The ECB interest rate decision will kickstart the day today, and that will take place at 8:15. There is no change expected after 7 straight meetings of cuts and 8 meetings overall. That took the price, or that took the main financing rate down from about 4.50 to 2.15. Afterwards, we'll have ECB's Lagarde having her normal press conference. We also have U.S. initial jobless claims. We have S&P Global Manufacturing and Services flash PMI estimates. We have Canada retail sales. All of that is on the schedule today. So in this video, I'll take a look at 3 of the major currency pairs: the euro versus U.S. dollar, dollar versus yen, and sterling versus U.S. dollar from a technical perspective. Let's get started. Going into the ECB meeting, the euro versus U.S. dollar is lower after rising over the last week or so of trading. That move to the upside has taken the price all the way through the 50% midpoint of the move down from the July high to the July low. That level came all the way down here at 116.92. We also moved above swing levels like this area right through here, the 61.8% retracement. In trading yesterday, we came down to test this old swing area right here, found support buyers and moved higher. We broke above this trend, this swing area up through here, up with a high of 1.17699 of that swing area. But as you can see, the momentum faded in the Asian session. We started to rotate back to the downside after the big gains over the last week or so of trading. We are back below that swing level low at 1.17529. Down below, the 61.8% retracement at 1.17252 would be a support target along with this area right through here. So let's call the 117.16, 117.25 the next key target on the downside. That if the price were to come down to, and if the buyers are to stay more in control, this would be the corrective zone to see a bounce for another run to the upside. In contrast, if the price were to move below that level, then we start to move back into things like the moving averages down here as support, and also this swing area. Remember the 116.63 to 91 level going all the way back to April and November of 2021. As a key level. It took a while to get above that level, but in trading this week, we were able to get back above that level and push to the upside. So this area would also be a key target on the downside for the euro versus U.S. dollar. Let's take a look at the dollar versus yen. Of course, the U.S. had their U.S. and Japan made their deal yesterday, and that caused a lot of up and down volatility. Actually, the market didn't quite know which way it wanted to go, whether we have a slower Japan economy or is it good news for the yen? Anyway, we saw the price move initially lower, then higher, then lower, then a little bit higher. I like the fact that the high price came right up to the 38.2% retracement here, and finally traders put a foot in the sand and said that's enough, and found willing sellers against that level. That pushed the price lower into the close. In the Asian session, we moved further to the downside, testing the 50% retracement of the move up from the July low to the July high. The 50 came in 145.94, which moved just a little bit below that, and then started to consolidate around that level. That gave the buyers the go-ahead to push to the upside. And since that time, we've moved back to that 38.2% retracement. It's now joined by the rising 100 bar moving average on the 4-hour chart, making this level at 146.70, a key barometer for traders, both for buyers and sellers. If the price stays below like it's trying to do right now, we could see a rotation back to the downside toward the 50%. Then we start to look toward the 100-day moving average and the 200 bar moving average on the 4-hour chart, which both near converged near this level at 145. What is that? 78. Conversely, if we do break back above the 38.2%, back above the 100 bar moving average, then the bias shifts a little bit more to the upside here after testing the 50%, finding support, moving higher. So there is a decision to go on, and there is a battle going on between support buyers against the 50%, resistance sellers against the broken 38 and 100 bar moving average. We'll see how that plays out in the new U.S. session today. Finally, let's take a look at the sterling versus U.S. dollar. We're seeing a downside today after the price moved up to test its 50% midpoint of the move down from the July high to the July low. The 50% came in at 135.76. We moved a little bit above it, but into this swing area defined by a number of different swing lows and swing highs going back in time through here, It wasn't perfect at all times, but a lot of different swing lows and swing highs in this area before moving to the downside right through here, returning back to that area, back to this remembered area where we found the willing sellers against that level. The other 50% started to rotate back to the downside. We are heading back down toward its 38.2%, broken 38.2, I should say. That area level comes in at 135.26. So we can. Hope to, or the buyers would hope to see some support buying against that level. Maybe this down to the low price from yesterday, which was also the high of this swing area, would be another key target to aspire to find a support if the buyers are to take the price back to the upside after the retracement near the 50% retracement. So 50% midpoint level. So this is our support zone for the sterling versus US dollar, 38.2% retracement, and the low price right here, 135.14. Look for support buyers against that area. So there you have it. Look at three of the major currency pairs. Ahead of that big ECB rate decision, no change expected though, and the initial jobless claims. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.